Hey everyone, it's Kyla. Welcome to our channel where I talk about the stock market and the economy amongst other things. Going to talk about dichotomy in the golden age of fraud today, joined by my coffee pot and a dishwasher. A little bit about the Fed, capital discipline, artificial scarcity, and the Gilded Age. And this video is brought to you by Asset Dash. Stop checking multiple investment accounts and crypto wallets and track everything in one place with Asset Dash. They support everything from NFTs to DeFi to stocks and every major crypto exchange, brokerage, blockchain, and crypto wallet. You can receive notifications and insights about your investments and more. It was voted #1 product on Product Hunt, so you know it's good. Check out the app in the description box below. And of course, this is not investment advice, just something that is hopefully useful to you. The market is all over the place. There was a huge sell-off yesterday in the red. USD was losing its peg to the dollar. Things were just seeming very explodey, and layoffs are happening. Funding is drying up for some companies. Bitcoin is down, and it's really brutal, not just the sell-off, but the volatility in the sell-off. So with the market, it's sometimes like that limbo game where it's like, how low can you go without breaking your kneecaps? And the market was pretty happy after the Fed meeting. The Fed raised rates by 50 basis points. They plan on doing that quite a bit moving forward. The market was stoked because it's like, yeah, no 75 basis points. And then it seems like the market realized that 50 basis points is massive, absolutely monumental, and is now sort of digesting that information. Fed's also shrinking the balance sheet. And sell-offs are normal. They happen and they're good for the market because they do represent buying opportunities. But there's, of course, a bad feeling about seeing red. Like, we're human, and the market is very reactionary and nervous, which makes people very reactionary and nervous. And Powell pointed a lot of this out in his speech. But, things are weird. We have a war, we have a pandemic, we have political stagnation. So the market is going to be kind of weird too. But it's also really good to zoom out. Like, if you look at the max graph of the S&P 500, it's up 3,000%. So there is a lot of opportunities to still play the game and be in the market. But I want to talk sort of broadly speaking today about dichotomy. So first off, the Federal Reserve. It's a changing of the market regime. No longer is money free flowing. No longer is life easy. But the Fed is like, wow, the labor market is way too hot because everybody should go to work. Wage inflation needs to chill out. And also inflation is way too high. Please stop demanding things. And so they have a responsibility to fix this imbalance between supply and demand. But their toolkit, their rates, and their balance sheet only really works on the demand side. They can't produce more oil. They can't make ships go any faster. So their whole goal is like, hey, consumers, y'all need to chill out and hopefully everything can normalize. So we're going to raise rates to make you chill out a little bit more. And we're also going to shrink the balance sheet, which provides less support for the market. There's not that Fed backstop going on. And so that's probably what they're going to do. The plan is to ramp up the balance sheet roll off and probably do 50 basis points of rate hikes at the next few meetings. And I'm going to dive into a TikTok that I made that explains all of this, just in case you're curious, because it does a good job of it. This is Jerome Powell. I'm going to explain exactly what the Federal Reserve does and what they've done in the past. The most important thing to know is that the Fed is trying to slow the economy down to manage outsized inflation, and they're going to do that through higher rates and less support for the bond market through shrinking their balance sheet. What is the Fed? They are the bank that controls the banks. They're the central bank. They control money moves and are in charge of price stability, inflation, and maximum employment, jobs. And they manage all of this through their toolkit with the main goal to influence interest rates. Higher rates equals economy slows down, lower rates equals economy grows. For some history, in 2008, they did QE, bought up bonds with the goal to get the economy to grow. In 2014, they stopped buying bonds and instead they reinvested the proceeds of these maturing bonds into new bonds with the goal to keep the balance sheet the same size. In 2017, they said, hey, the economy is good to go, and they wanted to shrink the balance sheet passively, meaning they allow bonds to mature and they do not reinvest those proceeds, also known as runoff. During the pandemic, the Fed doubled their portfolio of mortgage and treasury bonds to $9 trillion to make sure the stock market didn't hit rock bottom. And now they're raising rates and shrinking the balance sheet, the goal to slow the economy down to manage inflation. They're going to shrink the balance sheet potentially by $95 billion a month, and the market is pricing in rate hikes of 3% between now and end of year. But the Fed is also going a step further and discussing selling off the balance sheet. The question is, how much of this do we need? How high should rates go? How much should the balance sheet shrink? And how much should we slow down the economy? Last time that we did this, we had the repo crisis, and the time before that, we had the taper tantrum. The market is already responding as stocks fall, yields rise, and the USD strengthens, and some fiscal tightening too. Liquidity is going away, and there's estimates that $1 trillion of QT equals a 10% drop in stocks. And the big question is, can they do all of this while avoiding a recession? So the Fed is doing the best that they can with the policy tools that they have. The market's been pretty frothy recently, right? Imagine making policy in this sort of environment. You have negative IPOs, you have ARK Innovation that's quadrupled in value and it's nearly back down to where it started. And then homes are exorbitantly expensive. Diesel prices are rising, fertilizer prices are up. And so things have to revert to some sort of reality eventually. And once the wind starts blowing, the house of cards is going to have to tumble, right? And it's scary. The Fed shoulders some of that blame, but a really interesting thing that I don't know why we don't talk about it more, but the delay in monetary policy kind of happened because the government, who is in charge of appointing, couldn't make a decision on what they wanted, which, surprise, surprise, they couldn't make a decision on who was going to be in charge. And so the Fed had to wait on that decision-making process because of the uncertainty of their own future, which is kind of meta, right? They're figuring out our economic future, but because they didn't know their own future, they were not able to decide our future, which is arguably why we're behind the curve now, was because that uncertainty in leadership. So there's a lot of questions left. So just because the Fed knows their path forward, raising rates by 50 basis points, shrinking the balance sheet, doesn't mean that the path forward is certain. The Fed is still kind of feeling things out. And so if I had to reenact the Fed meeting from Wednesday, I'm Jerome Powell. Hello, yes, inflation is indeed super high, and we know that, and we are going to deal with that. Our tools and our economy is strong. Also, have you noticed that bad things keep on happening? And this is Nick from the Wall Street Journal. Hey man, a recession. We seem to be barreling towards that. Powell, yes, 3.6% unemployment rate, even though the participation rate dropped a few basis points recently. Please go back to work. Supply and demand is a mess. We have to get wages down, to get inflation down, to decelerate, not slow the economy. Everyone is doing somewhat okay, it seems, right? And so Steve from CNBC, 75 basis points. What? When is that coming? Why 50 basis points? Pow, 75 basis points is far too much. Inflation is going to flatten out soon, hopefully. And though we're waiting for evidence on that, supply chains, China needs to open up. Oh my gosh, though. And listen, we aren't going to stop. We'll just go down to 25 basis points. Colby from the FT, what's the neutral rate? Right, that's when the economy is just straight up vibing. Economic activity is not going higher or lower. I don't really know where that is. It's pretty much based on vibes. Somewhere between 2 to 3%, but we're so far from that. Financial conditions in the economy will tell us it's going down. Steve from Bloomberg, recession. Oh my gosh, listen. Okay, so we could have to induce a recession, but we will need to see. I love Volcker because he was like, get wrecked, and I understand that personally. We need price stability. Things are pretty crazy right now. If appropriate, yeah, recession. But we're monitoring the vibes, don't worry. So his whole thing was that the economy is strong, even though GDP was negative, and the labor market is very tight. 3.6% unemployment is super low. So things should be okay if they slow demand down a little bit. The economy can handle it, they're saying. And like, probably yes, but because the stock market is a whiny crybaby, but time will tell how both the economy and financial conditions respond to the Fed's move, because monetary policy really is vibes at the end of the day. And that's kind of what they keep on saying in all their videos. They're like, yeah, we're just gonna like feel it out, see what's going down, see how things are responding. And that's just how it is. That's what they're doing. I want to talk about capital discipline because that's also decision making. So oil, OPEC Plus has been underproducing for a while, which leads to shortages in oil supply. There's been freezes in North Dakota, political turmoil in Libya, all of which have exacerbated those problems. And OPEC Plus announced at the end of their most recent meeting that, hey, don't worry, we're going to produce more, and that the oil market is balanced. Both those are probably lies. They're not going to produce more. The oil market is not balanced. As we know, US shale producers have underproduced oil because of capital discipline. Their investors are like, hey man, you burned our money back in 2014. Cut that out and give us a lot of money now to make up for it. Give us a little kiss on the cheek too. And I think that capital discipline idea of like, we have an energy crisis, but investors are like, but what about us and our money is very much like, okay, that is the vibe. Okay, I get it. But also like, wow. Then that gets into venture capital. So venture capital money has been drying up for some companies. Layoffs have been happening. There has been, I think, a little bit of a lack of capital discipline in the VC space. Amazing people are now losing their jobs because companies overhired or they need to get towards profitability. So, cutting jobs is one way to do that. And I think that thing that bothers me most about this is like the companies that get funding. And I've talked about this before, and what they do with that funding kind of, I don't mean to like get up on a soapbox because what am I saying? But like, we live in a world that operates in the extremes. And I think we need to have companies that are building in the tail ends because we have these extreme events that keep on occurring. And Lux Capital and other funds do a really good job of investing in that space. But like some VCs, they treated the companies as video game sinks where it's like, okay, I just need to like allocate money. I don't really care sure where it goes. It has Web3 in the title. Sign me up, buddies. And VC investment drives the future of the world. So the capital burn on some of these companies is concerning, but of course, like some of that does end up being productive. It's just the allocation itself is questionable, and that's a lack of capital discipline. Artificial scarcity. So this is like old news now in the crypto space, but Bored Apes had a big land sale, and it actually went down majorly in price. So they have their big metaverse land sale for other deeds. It's basically the pinnacle of artificial scarcity because, of course, it's just metaverse land, and it's kind of like you make as much as you have of it. Of course, there's like computing power that sort of is a physical constraint on all that, but it's mostly like we only have this much land. Wink, 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 wink. And it was a really big deal because a lot of ETH was burned as people a lot of ETH was burned as people tried to get metaverse ape land, and that's why you use L2s instead of L1s. And some people won and some people lost, and that was just kind of like that. And it was kind of like there wasn't any thinking involved. It was kind of like if you just rolled the dice and you got land or not, and it was artificial scarcity. But the housing crisis is real scarcity. So mortgage rates are above 5.5%, which makes it really difficult to own a home. It's also very difficult to find one. Home supply is at all-time lows, so it's just brutal for anybody who's like, I actually want to have equity and ownership, and then somebody comes in 600K over asking price, and you're like, wow, okay, all my dreams are going to be crushed. The American dream of having 2.5 kids, a house, a 9 to 5 that can finance those kids, and the house is just out of reach. Like it's almost impossible to do that, and people are buying 40K metaverse land plots. Then there's people who just like can't afford a home, and it's just so stark. And I know that this is just life, but it's just such a stark contrast. I think in the metaverse itself sort of amplifies a lot. The Gilded Age, Met Gala versus Roe v. Wade. So if you have not heard about Roe v. Wade, essentially the Supreme Court was like, we're gonna strike that the heck down. Alito had a very interesting opinion on it. I recommend that you read it, but I am a 24-year-old woman, so this is very important to me, and I think it should be important to everybody because it's not just about abortion, it's about broader privacy concerns. You should be concerned about this. I think that it is a sign that things are going backwards, where we're having rights repealed, not just for women, but for everybody, you included. And if you want to point to the Constitution as the document that should be the living, breathing entity of the United States, sure, of course. But things that are not mentioned in the Constitution, abortion, Ohio, the Air Force, 9 justices on the Supreme Court, Jesus, and parties, and also women are not mentioned in the Constitution. It's a very old document. It was invented before a lot of things were. They did mention voting rights and the need for federal enforcement. All right, so that's my opinion. I really respect your right to have an opinion on this subject. If you disagree with me, that's fine. That's totally okay. I ask that you respect my opinion, and I will respect yours. So the Gilded Age. The Met Gala, for some reason, chose the theme Gilded Age for their big party of celebrities. It's from a Mark Twain novel. It's a satirical take on the supposed post-Civil War golden era, which felt like way too close to home. It was an era of serious social problems masked by a thin golding of economic expansion, a time of materialistic excess combined with extreme poverty and political corruption. That's way too close to home. Naturally, the Met Gala happened at the same time as the Supreme Court leak. So if you're on Twitter, the dichotomy of the tweets was just crazy. It was a really odd thing to experience because it's like almost too ironic. Like if you're watching a sitcom and everyone is at a fancy ball and someone came on the loudspeaker and was like, hey, all your rights have just been repealed. Isn't that super neat and awesome? The US is super politically divided, and it would make sense because it's a sitcom. It's absurd. But there's like a deep sense of irony that permeates all these recent events, and it's like living in two worlds at once. Presumably reality converges eventually, but I don't know what that looks like. Some final thoughts. We live in an ecosystem. And I feel like I do get pretty kumbaya around the fire compared to other finance and tech writers. For sure I do. Like I'm over here talking about how things feel, and other people are like margins. But I don't know. I think it's really important to humanize finance. And I think that when you work in finance, it can be really difficult. That was one thing I noticed when I was at my previous job, was that like you had to think about everything in terms of cost. So like raising prices was a good thing. Firing people was a good thing because it made the company more profitable, and profits at the end of the day are a core driver of a company. And that really bugged me. And there's a poem from Emily Dickinson that I really like. Bloom is result to meet a flower, and casually glance would cause one scarcely to suspect the minor circumstance assisting in the bright affair, so intricately done, then offered as a butterfly to the meridian to pack the bud, oppose the worm, obtain its right of due, adjust heat, elude the wind, escape the prowling bee. Great nature not to disappoint, awaiting her that day. To be a flower is profound responsibility. I have some links in the Substack if you want to go check those out, and I will be back on Thursday. I'll be back on Thursday with a piece on UST and how it's similar to the Federal Reserve. Super excited, and thanks so much for hanging out. I hope that you're doing well, and I will see you soon. Bye, everybody.